Hello! Today I want to make a brief video on quarterly estimated taxes. What are they? Who has to do them? When are they due? And how do you calculate them? And how do you pay them? I will give you more resources at the end in case this video doesn't answer all your questions. First, I'll introduce myself. My name is Jenny Palo. I work as a full-time therapist with adults in a private practice setting. I'm also a clinical supervisor for school counselors wanting to get their LPCs and then start their own private practices. In addition to that, I got certified as a bookkeeper and tax preparer, and I have a side business helping fellow therapists with these financial matters that are sometimes daunting and we don't really learn about in grad school. My passion is to help people learn about taxes and other financial matters for a low cost. You are helping people, and I want to help you to be able to do that. It's easy to get taken advantage of when it's something that you don't know as much about, and I see people with pretty simple tax situations sometimes paying a lot of money for things that they could learn to do themselves. With that in mind, I'm making this video today in the hopes that it teaches you what you need to know about quarterly estimated taxes. And then you can decide if you still need to work with a tax pro or if this is something you can manage on your own. Let's start with what we're talking about when we say quarterly estimated taxes. The IRS wants us to pay taxes on almost every single red cent that we make or acquire. And they want us to pay as you go rather than waiting until April 15th each year. This is true for many things, from gambling winnings, prize money, or doing side hustles like babysitting or DoorDash. And the way they get their money throughout the year is by way of quarterly estimated taxes. The main other way that the IRS gets regular tax payments is through payroll. So if you are an employee of someone else and they are taking out taxes on your behalf through a payroll process, you do not need to pay quarterly estimated taxes on that income. However, if you have any money outside of that, you will most likely have to pay quarterly estimated taxes on it. So let's look at a few examples. Henry works as a therapist within a group practice. He gets paid by the group, and they consider him a 1099 contractor, not an employee. Darla is a full-time school counselor, but she sees 2 clients a week in the evenings and weekends. She gets paid through Headway. Marcus works full-time in private practice and gets his income from a variety of sources, including private pay clients, Sondermind, and directly from a few insurance payers that he's credentialed with. Joey just started seeing clients on her own. She is not licensed yet, but her state allows her to work in private practice under supervision. She did not register her business with the Secretary of State or do anything else to set up her business yet. In every one of these examples, the therapist would need to pay quarterly estimated taxes if they earned $1,000 or more for the year. And that's true as of the making of this video in May 2025. When we look at that $1,000, we are looking at the net amount. So that would be what's left over after we pay business expenses, and those expenses can include things like Psychology Today, Simple Practice, liability insurance, and office rent. You can look up the due dates for quarterly tax payments each year. They are usually due in April, June, September, and January. The April payment will include the amount from January, February, and March. And then the June payment includes income from April and May. The September payment includes June, July, and August. And then January includes September, October, November, and December. So how do you pay these? You can go to www.irs.gov/payments. From there, you can select to make a direct payment from your bank account or pay with a credit card. I personally would choose to pay with the bank account option if you can, because this will avoid transaction fees. And then you select Pay Individual Tax. Fill out the fields in the form to make the payment. Depending on which state you live in, you may also have to pay state income tax on a quarterly basis. I live in Colorado, so we have a flat income tax rate of 4.5%. And I go to the Colorado Department of Revenue page to make my quarterly tax payments. I just do that at the same time that I'm doing the federal payments. You'll have to figure out the details for your state individually. Some states, such as Florida, Texas, and Wyoming, do not have any income tax. So if you live and work in one of those states, you may only have to worry about the federal income taxes. How do you calculate how much you pay? You'll need to pay 15.3% for Medicare and Social Security tax. You will also need to pay federal income tax, which is a different amount for everyone, but many estimate that they will pay about 15 to 20% here. Let's take an example. Let's say Marcia is a therapist in private practice and she makes $100 per session. She has 15 sessions a week and makes $1,500 per week. For the first quarter, from January 1st through March 31st, she made $20,250 total. However, she has expenses to take out of those profits. After paying rent, Psychology Today, Simple Practice, liability insurance, and office supplies, her total expenses are $500 per month. And that's $1,500 for those 3 months in the first quarter. So now she has $18,750 left. She will need to pay 15.3% of that for her self-employment tax, otherwise known as Medicare and Social Security. So 18,750 times 0.153, or 15.3%, gives us $2,869, and I am rounding that up a little bit. When she looks at her income tax form 1040 from last year, she sees on line 15 that the total tax is listed as $102,000. She files married jointly with her spouse. So for this year, she can look up the federal tax brackets to get a sense for what her income tax rate will be if she and her spouse have about the same situation as the year before. Here, she sees it's 22%. So she calculates her federal income tax, $18,750 times 0.22 equals $4,125. She adds the self-employment and income tax numbers together, 2,869 plus 4,125, and she gets 6,994. This is the amount that she is going to put in her payment to the IRS, going to irs.gov/payments. And if she lives in Colorado, she'll also go to the Colorado Department of Revenue's page, and she'll make a payment of $844 there. That is 4.5% of the $18,750. She'll make a note of what she paid and when she paid, so she can take those payments out of her annual taxes when she does those around April 15th of every year. So she's done with quarter one, and then she'll just go through the same process again for each quarter. In June, she'll calculate her earnings minus expenses for April and May, and then calculate the taxes and make those payments. She'll do it again in September for June through August, and then again in January of the following year for September through December. So let's go through the steps one at a time quickly here for a review. Step 1. Add up all of your income for the quarter. For Marcia, this was $20,250. Step 2. Subtract your expenses for the same time period. For Marcia, her expenses were $1,500, and that leaves $18,750 net income. Step 3, calculate the taxes you owe. In our example, Marcia owed $6,994 to the IRS and $844 to the state. Step 4, pay your taxes. Marcia went to irs.gov/payments and the Colorado Department of Revenue to make her payments. Step 5, record your payment amounts and dates for later. And that's it. If you still have questions, feel free to reach out to me. My contact information is here, wholehumanfinancial@gmail.com. I will also link some references from the IRS in the comments below this video, so you can take a look at that. I wish you well.